All right, good evening, everybody. We're here right outside of the Flatiron building on 23rd Street and 5th Avenue. We're going to be making a U-turn and going all the way up to Central Park South. However, we're going to be walking up Broadway, mainly because it's one of my favorite places to walk on a Friday night. You're going to see so many bars, restaurants, essentially all the nightlife picking up. So without further ado, let's go ahead and get started. This is what I like to call the mini skyline above Madison Square Park. It's about 6:15 p.m. You're going to have a lot of office workers getting off, people commuting home. And we should have a lot of the bars and restaurants packed. It's also important to note that it is going to be the main UN General Assembly week. So the city is going to be rocking next week. If you're traveling to New York City, definitely plan on not driving your vehicle here. Lots of roads are going to be closed off due to all the politicians from all over the world, and hotel rates are going to be sky high as well. I was looking at a few of the 5-star hotels, and many of them have room rates that go upwards of $1,000 plus per night. In any event, here we are in Flatiron Nomad. They did such a good job with the outdoor space here. You have everybody kind of relaxing, lounging about. And then this is a look at the Flatiron building, which is going to be converted into condos, which should be quite exciting. I do also want to point out 262 5th Avenue, which is this building as well. You know, there's a lot of controversy about this building because it blocks one of the most iconic views of the Empire State Building, and it's only going to have 26 residential units in the entire building. So a lot of New Yorkers are up in arms to say that the developer has destroyed one of the best views in the entire city to build a big monstrosity structure that's only set to house 26 families. And knowing the price point of those condos, chances are the lion's share of those individuals are very seldom going to even be occupying those apartments. This is Italy. You have a little espresso bar outside, which is very unique. And then you have the main Italy outside, or I should say across the street inside.
Excuse me, sir.
Hey. Oh yeah. No, what's going on? I can help. What's up?
No, I just want you to step aside so I can record real
Oh,
quick.
go ahead. Feel free. Take care. No worries. I was going to say, there's also a San Gennaro's feast going on in Little Italy that I've yet to have a chance to go to. Maybe I'll try to get there Saturday or Sunday night. In other news, the S&P 500 closed at a brand new all-time record high. And we've had a wave of new IPOs hitting the market. This week we had Gemini, ticker symbol GEMI, listing on the NASDAQ. And Gemini is the cryptocurrency exchange backed by the Winklevoss twins. I just published our bi-weekly equity research piece, and I wanted to make a pretty large excerpt of that report about the strength in the IPO market. And not to say that you should buy any of these new IPOs, which, if you kind of use history as your guide, you shouldn't. You should usually wait about, I'd say, 12 to 16 months in order to, or before you think about purchasing a new issue. And the reason why I say this is because when a company comes public, in its simplest form, it's the transfer of ownership from the private sector and the employees to the public sector. You know, institutional investors, retail investors like me and you. So when a company comes public, a lot of the big investment banks and the equity research shops will initiate coverage on these companies to make sure that they're living up to their stated projections. And as a few quarters go by, and let's say a company says, we're going to do $1 in EPS on $1 billion in revenue, and they do $1.25 billion in revenue on $1.20 in EPS, well, that means they beat their expectations. And if a company beats their expectations between 4 to 6 quarters, well, a lot more analysts are going to be covering that stock and recommending the PMs to purchase that stock. So what I like to do is wait.
What's weird?
4 to 6 quarters before I really entertain any of those new IPOs. In any event, we're now here on Broadway, where you have a very high concentration of restaurants, and they've closed down Broadway predominantly to only pedestrian traffic, so you can dine outside and you don't have to worry about all the vehicles whizzing by. They did a really good job. And then you have, again, those buildings overlooking Madison Square Park. Just to finish my point on the IPO market, you should always be monitoring it very, very closely, because that's a good gauge of corporate sentiment on the street, right? If you're a CEO of a company and you deem it's the right time to take your company public, well, chances are you have a positive outlook on the economy. Very, very seldom does a corporation or a company want to go public during the depths of a bear market. They want to go public when they're optimistic, and then that they could get the highest valuation possible for the shares that they're offering. In addition to this, the more IPOs you have coming on the market, well, the more fee income the investment banks will be taking in. And that's how these big bankers make all their money, is advisory fees, equity underwriting, and the like. So if you have a large pipeline of deal flow, well, that should translate into higher earnings for bank stocks, which means the financial sector should get a lift. And that's exactly what we've really been seeing. We have the XLF, which is the financial ETF, breaking into new all-time record high territory. And every single banker that I talk to claims that they're extremely, extremely busy. So that is a very positive sign for the market, that the IPO market is picking up. Deal flow is picking up, which should translate into higher earnings growth for a lot of the big investment banks like Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, and the like. Now we're on 26th Street and Broadway. This is the Anita Gelato. Look at how nice it is. Everybody's able to sit outside. Just the overall atmosphere and the vibe is really unmatched. Pretty soon you're going to have a line out the door on this gelato place. Now, another thing I just quickly wanted to bring up is that this Wednesday was Fed Day, right? The conclusion of the FOMC meeting, which is the Federal Open Market Committee meeting, and Federal Reserve Chairman Jerome Powell decided to cut interest rates by 1/4 percentage point. And the reason why this is relevant is because as we continue on and enter this cutting cycle, that should also spur more deal-making activity on Wall Street in terms of the M&A business or the merger and acquisition business. Because as interest rates come down or borrowing costs come down, well, what does that mean? It's going to be cheaper. The cost of money is going to be cheaper, and it'll be easier for corporations to take on debt to fund acquisitions. So we'll have to keep our eye on that. If you want to sign up for our free investing letter, you could do that in the link in the description on our Substack. This is the Smith restaurant across the street. This is a very good spot. There's multiple locations throughout the city, with my favorite one being on the Upper West Side of Manhattan, right across the street from Lincoln Center. Here we have Pura Vida, which is very popular in Miami, Florida. They've just started expanding to New York City. There's multiple locations. There's another location at Bryant Park. And if you stand over here, you can see 262 Fifth Avenue, which is that 26-unit condominium building. And again, only bikes allowed on Broadway, no vehicles allowed. And we're now walking up to 27th Street. Another knock-on effect, which I forgot to talk about in our recent investor letter, is that a 25 basis point rate cut is not going to do a whole lot to help consumers on the onset. Assuming that we get additional rate cuts, that should help. But if you think about the net interest income that regular retail investors get from leaving their money in a bank account or a money market account, that has actually been quite lucrative for them because interest rates have been high. With a 25 basis point rate cut, consumers and retail investors are now going to be making a little bit less in their money market accounts because interest rates have come down a little bit. So why is that relevant? And what are the knock-on effects? Well, the reason why it's relevant to talk about is because money market balances have reached new all-time record highs. And as interest rates come down, that money is going to have to go somewhere, right? People are not going to leave their money in a bank account or in a money market account if they can't beat inflation. So my theory is that a lot of that money is going to flow out of money market funds and into the stock market. Let's see what this spot is. Pizza spot. This is now 28th Street and Broadway. You're going to see the brand new Ritz-Carlton Nomad, which is a great property. It sits right outside the R and W train stations. And here it is across the street. This is a really nice property, which is probably going to be packed for the UN week. Take a quick detour just so I could show you the front of the building. Here you can see the R and W trains downtown. In any event, this is a really nice property here. The Ritz-Carlton Nomad. They also have public space available here that's open 24/7. Very nice garden area. It's interesting to look at the neighboring buildings to realize what a lot of the buildings used to look like, at least the ones that have survived. And now more often we're getting these new luxury buildings. Check out how beautiful this building is right here. Once we walk up one block, you're going to see this spectacular view of the Empire State Building. Headed up towards New York City's Koreatown, which is on 32nd Street, Korea Way. This is the view that I'm talking about. Look at this. The building itself is beautiful. 29th Street and Broadway we're on. take one more look at 1200 Broadway. We're already on 30th Street. I forgot to take you on a detour. I was going to go to 28th Street. In any event, I wanted to take you there because that's the first location of Luckin Coffee in the city. Now, there's more locations as they're expanding, but I wanted to just to take you to that one to show you. And supposedly they're expanding with a lot more locations throughout the city. In any event, we're going to be doing another walking tour on Canal Street because there's another Chinese company, which is a Chinese ice cream and boba company that is coming to the United States that most New Yorkers and most Americans don't know about. And the company is called Mixue. Mixue, I believe it's spelled. And that's the largest fast food chain in the world. Bigger than McDonald's. They have more locations than McDonald's. And they're finally coming to the United States for the first time in history. And the first location is going to be on Canal Street. Now, why do I bring that up? Why is it important? Because this is going to be a massive, in my opinion, right? This is all opinionated. This is going to be a massive blow to U.S. Fast food and fast casual drink companies, such as Starbucks, Brothers Coffee, and the like. Because if you look at the economics or the business model of a Luckin Coffee or a Mixue, their prices are so low that if they come in here, they are essentially going to undercut the entire market. Now, in terms of the product at Mixue, I'm not too sure if it's good or not. I've never tried it. But Luckin Coffee's product is very good. It is a very good product. And if you've ever downloaded the app, let me see if I got the app here since we're waiting for the light. And I'll show it to you, but it's almost like they gamify the app. And I used to be long a ton of this stock before it was delisted. Let me see. Yeah, so here it is, the Luckin Coffee app. But if you go to like your account or your orders, right, the coupons, look at the prices of everything. It's like 100% off, 40% off, 40% off. And the prices of their drinks are like $1 or $2 cheaper than Starbucks. Now, why is that relevant? Well, because every time you go and shop, right, at a Luckin Coffee, which is fully digital, they're cashless. You can't even order in the stores. You just have to order online via the app. Every time you order, they give you another coupon that expires in 7 days. So if you are a repeat customer, right, it's essentially like they're gamifying it, so they force you to be a repeat customer so you never pay rack rate, ever. So essentially everything is quote-unquote the same price as a Starbucks, but it's never the same price if you go every week. And I think that's going to force, this is my prediction, my prediction is that you're going to see Luckin Coffee explode across the United States. You're going to have hundreds of locations of these things. There's 4 locations right now in the United States. It's going to hundreds. The same thing, now I don't know actually with this Mixue, I'm not too sure, but if you're an investor in the fast casual space, you got to be studying those companies backwards and forwards. You got to be understanding their user interface with their customers, how they order. The friction in the transaction is so low at Luckin Coffee that I've been finding myself going to Luckin Coffee a lot more than other brands. It's frictionless, it's easy, and it's very Gen Z focused. So if you're an investor in a Starbucks or Brothers, I wouldn't be surprised that on earnings calls coming up in the future, you're going to see a lot of analysts getting on these calls and asking questions about, hey, what are you guys doing to essentially isolate yourself from the disruption that's coming from brands like Luckin Coffee and Mishwe. So let's make a mental note of that, and let's keep tabs on it. Now, Mishwe, I believe they listed in China, so they're a publicly traded company in China. Obviously, Luckin Coffee is too. Luckin Coffee was delisted on the NASDAQ, but it's still an ADR. You could buy the American Depository Receipt, right? It trades OTC. It's you could get it over the counter. Anyway, we're now in Koreatown. This is one of my favorite spots in the city, 32nd Street and Broadway. So many great restaurants here. A lot of good bakeries here too. See, a lot of people are starting to come out. You know, this is one of my favorite dessert places in New York. It's called Nana's Green Tea. It's very, very good. If you look over to the left, you'll be able to see something very cool. This is the Gimbal Sky Bridge. So now we're coming up towards Hanover Square. Wow, look what's going on here. This is cool.
Okay, we're gonna move it on. From here, we have a shuffle to the side. Now we're gonna shuffle to the front. Yeah. So with that right foot, we're gonna shuffle to the front. I see you. 5, 6. Shuffle to the front. Shuffle to the front. Shuffle to the back. Shuffle to the front. Shuffle to the back. This is also
very nice. They always have a bunch of stuff for the public to enjoy.
Shuffle. I saw that. Come on.
Very, very cool.
Hey, we got some modelers up here now. Shuffle to the front. Shuffle to the right. And 5, 6. Let's go to the right. Here we go. Shuffle to the right. Shuffle to the right. Shuffle. And let's bring it back to our single time.
Everybody out playing ping pong. Okay, 34th Street. Herald Square. We're about to pass one of these Capital One cafes. I think that's such a brilliant idea. Whoever came up with that idea at Capital One should get a raise, because nobody goes into banks anymore. I don't even remember the last time I've been into a bank. There's just no reason. Everything's online. So in order to drive new account creations or new account openings, if you just create a coffee shop in your bank, well, that's automatically potential customers. It's a brilliant idea. You know, there was an article in the Wall Street Journal today that was talking about all of the different credit card issuers, particularly American Express. And Amex is raising their yearly fee, or their annual fee, to $875, I believe, or maybe more. Maybe it was $975. I forget. In any event, the Chase Sapphire Reserve card, I believe they're going to raise that as well. And I wonder if you're going to start to see a lot of churn. I don't know if we could say that for certain, but we might. Thinking about it, it's really brilliant when you consider the fact that they're building just a monster reoccurring revenue stream. It's almost as if that's their segue into building some sort of a SaaS business with reoccurring revenue. Similar to what Costco does too, right? I mean, Costco is so lucrative because of the memberships that they sell. And now you have all these credit card companies. It's as if the more exclusive, right, the marketing pitch is the more exclusive it is, the more expensive the annual fee is going to be. They kind of pull on the heartstrings as like a status symbol. Speaking of that, American Express hit a new all-time record high today. I'm sure they have a big data team at Amex that crunched the numbers and found that even if they raise the price to $1,000 a year, they're probably going to have very low churn. So Amex is the leader in the group. Broke out to a new all-time record high. This is West 36th Street. We're looking at the Harrier building now. And we'll pass right in front of Bryant Park. I remember during the pandemic, all of these were totally blown out. There was nothing here. And now everything is at full occupancy, which is really great to see. This is West 37th Street. Looks like they're putting up even more scaffolding. Okay, this is now West 38th Street, and adjacent us, you're gonna have the Marriott Residence Inn. You'll also see the Bank of China coming up here in a moment. It's 6:17 now. And it's starting to get dark out. I'm not looking forward to when it gets dark out at 4 p.m. It's going to be pretty depressing, but it is what it is. You have the Bank of China to your left. Speaking of China, by the way, China is really taking a different stance on semiconductors. And Huawei apparently is just released one of their new chips, their new AI chips. And as you know, the US and China have been in a little bit of a trade war. The US imposing 30% blanket tariffs on China. But now China is coming out and saying that they don't want any companies purchasing any NVIDIA chips anymore. But the interesting thing is that NVIDIA finished the week higher. Let's actually see how it traded today. So in my perspective, the way I'm interpreting this as we're looking at the Bank of China is that there's going to be some sort of a resolution here. There's an old saying on Wall Street that usually somebody always knows something. Let me pull up the trading view here. Yeah, you have NVIDIA here breaking back above the 50-day moving average, and the stock's catching a little bit of a bid. The way I'm interpreting that is there's probably going to be some sort of a resolution between the US and China on chip exports, which is essentially found revenue for the company. Because I think the stat is that China used to account for about 1/5 of NVIDIA's entire revenue. So 1/5 of all NVIDIA's revenue used to come from China. Now it's only 6% of revenue comes from China. So if China can get cranking again, ordering a bunch of NVIDIA chips, I mean, what do you think that's going to do for the stock? So it's almost like a call option to the upside, right? It's just like found revenue. Now, nobody can guarantee that that's what's going to happen, but it's possible. The Chinese Communist Party have been pushing really, really hard for President Trump to come have a meeting in China, in Beijing. I don't know if that'll happen or not, but we'll see. Now, we almost had a pretty good deal with them, but Howard Lutnick, our Commerce Secretary, really pissed the Chinese off when he said, look, we're not selling the Chinese our best chips, not even our third best or our fourth best. We're selling them, essentially bottom of the barrel stuff. And it's like, listen, you didn't have to say that, right? That's just kind of like poking the bear. There's no reason to say that. And the Chinese were very offended by that. And to be honest, rightfully so. I'm just going to say it. I mean, you don't need to say that. It's obvious that we're degrading the quality of the chips we're sending them. That's like a stated obvious. You don't need to put that out in the open and piss everybody off. In any event, so even with all of that, the resiliency in the stock has been unbelievable. So imagine once all of that craziness is in the rearview mirror and Chinese companies start purchasing NVIDIA chips again. Again, that's a big if. I'm hearing a lot of conflicting things on the street. On one hand, from a lot of friends that are very, very well connected with this stuff, they say that Chinese companies don't want to purchase Huawei chips because they're not as good as NVIDIA, and they want to train their AI models on NVIDIA hardware. But then on the other hand, I have a lot of really credible sources, really, really smart people coming out here and saying, well, Huawei's products are significantly cheaper than NVIDIA, and their performance is better. So for me, I take it with a grain of salt, and I think the truth lies somewhere in the middle.
They're good, but they're not that good.
Okay, this is 43rd Street. Let's try to make a move around here. Again, we're now on 43rd Street and Avenue of the Americas. We have the Steinway and Sons piano store across the street. And in the distance, you have a beautiful shot of Steinway Tower, which is the skinniest residential apartment building in the world, which Robert Herjavec just recently purchased a property in there. Now, Robert, the guy from Shark Tank, which he's not very famous for being on, obviously he's very famous for being on Shark Tank, but he's a cybersecurity executive, right? That's where he made the lion's share of his money. In any event, he had a spot at 157 West 57th Street, at a really nice place there, which he sold. So I'm speculating that he maybe did a 1031 exchange and rolled those proceeds into Steinway Tower. I'm not 100% sure if that's the case, but he has a really nice unit in Steinway Tower now. This is now West 44th Street. Now going to walk past my old office here on 45th Street. The Marsh McLennan building, which, by the way, 2 floors above us we had D.E. Shaw, which is the quantitative hedge fund founded by David Shaw. Oh, funny story. Across the Bloomberg the other day, I get this notification that D.E. Shaw is raising money for another fund. Now, obviously, knowing that D.E. Shaw is a quant firm, on this new fund, they're not going to use any models or any algorithms to trade. They're essentially going to have on-site PMs picking stocks individually with no interference from algorithms or computers, which I thought was so interesting because they are, one of the best quant shops on Wall Street. So we'll see how that plays out. In the world of AI and algorithms and high frequency trading, a firm like D.E. Shaw is raising money for a fund that is not going to incorporate any of those things. Anyway, thought that was quite interesting. I think they're looking to raise $2 or $3 billion for it, and just have, essentially stock pickers pick the stocks. I guess technically this is called Little Brazil, but I don't know of one Brazilian restaurant right here on 46th Street. We're also going to come up on the News Corporation building. News Corp is under the same umbrella as the Wall Street Journal and Barron's. in addition to Investors Business Daily. We've talked about that multiple times, but IBD founder Bill O'Neill, or William J. O'Neill, he unfortunately passed away. I think it's been 2 years now, May 28th. But he sold that company for about $250 million. And I know a lot of the founding PMs at O'Neill, and they tell me that Bill used the proceeds of one of his greatest trades to start the paper. And the paper never made money because it's not a lucrative business. You know, newspaper company is not a lucrative business. But he did it kind of as a way to give back to the retail kind of trading community and educate. But it's just so fascinating that it never really made money. It's not a moneymaker. In any event, this is 270 Park, which is the brand new headquarters of JP Morgan Chase. It's a stunning, stunning building. But what I'm really excited about is 350 Park Avenue, which is going to be the new headquarters of Citadel. And that's going to be a monstrosity. It's going to sit 1,650 feet tall. It's going to be the tallest office building in New York City. And it's even going to be taller than Central Park Tower, which is the tallest residential apartment tower at 1,550 feet tall. The developer on that deal is Gary Burnett from Extel. But across the street, that's News Corp. That's where they film Fox News. So if you ever watch that show, The Five, they film it right here. You can see the studio. So inside this little blue box, that's where they filmed The Five. And then a few years ago, I remember it was crazy. They always have the News Corporation Christmas tree. And a few years ago, this lunatic lights it on fire. So you had this massive flaming Christmas tree up and down 6th Avenue. I just love Avenue of the Americas because a lot of the office buildings look similar and it just gives you a good feel. Like you could really feel the success and the optimism all up and down 6th Avenue as you head towards Radio City Music Hall. I'll point out, I always point it out whenever we do this walk, but I always love looking at the only holdout building at Rockefeller Center. And it's right in the Magnolia Bakery. It's very, very cool. You can see it here on the corner of 49th Street. And you'll also have the main entrance to the subway station as well. And across the street you have the Adele's Famous, which is quite interesting. So this is the holdout building right here on 49th Street.
We should probably eat here.
God, that music is dreadful, dreadful, dreadful. So this is the holdout building. This is the only holdout building within the confines of Rockefeller Center. They just would never sell. So the Rockefellers went through with the project anyway.
इस साल तो नहीं होता है, अगले साल चांसेस थे।
I've always said.
Okay, here you have Radio City Music Hall.
Meanwhile, Obama.
There's the Brooks Brothers. This is Newburger Berman. But take a look at that. It's the great shot of the Steinway Tower.
Oh my God! Oh my.
Be able to see 53 West 53rd Street here in a moment. That's across the street from the Hilton Flagship Hotel.
العربية مش العالم دي مش هبلة ولا عبيط.
Here you have it, 53 West 53rd, right next to Charles Schwab. That building is connected to MoMA. And it is extremely packed. The city definitely feels alive. You'll also have the Warwick Hotel just off to our right. This is now 54th Street and Avenue of the Americas. And look at this view here of 432 Park Avenue. It's another ultra-luxury condo building in Manhattan. And that's Steinway Tower again. The Alliance Bernstein, but you also have Fortress investments in there. Now, speaking of Fortress, Mike Novogratz used to work at Fortress Investments, and now he runs Galaxy Digital, which is essentially the Goldman Sachs of cryptocurrency. But I think the real opportunity with that company is not, it doesn't have anything to do with cryptocurrencies. Actually, it has to do with data center. So if you want to do a little bit of research, Mike Novogratz and company Galaxy acquired this unbelievable asset in Texas called the Helios Data Center. And they already have contracts signed with CoreWeave. And in full disclosure, I own the stock. But do a little bit of research into Galaxy Digital. In my view, I think many of the analysts on Wall Street who are covering the stock really don't understand how to evaluate the company. That might sound a little arrogant to say that, you know, these analysts maybe don't know what they're talking about, but that's kind of how I feel. The way I'm modeling it, without any of the data center components coming into play, it's $80 a share. But with the data center coming into play, it's about $125. That's kind of how I'm modeling it, at least. I don't even know where it's trading at right now. I think it's trading at like 28 bucks, 25 to 28 bucks. This is the Carnegie House, 100 West 57th Street. They're going through a brutal time here at the Carnegie House. But we don't have enough time to talk about that on today's episode. But essentially, anybody who owns at the Carnegie House is going to have a really bad time. We'll just say that. We'll put it lightly. All right, and now we are at Billionaires Row. You see Steinway Tower, 157, 217 West 57th Street. And we're almost to our destination. The 57th Street subway where you can get the F train, and then in 2 blocks we'll be at 59th Street or Central Park South, which is my favorite neighborhood in all of New York. If you guys enjoyed this walking tour, subscribe to the channel, leave a like on the video, and if you're interested in all of our equity research for free, click the link to our Substack. I send out a post every other Thursday, and it doesn't cost anything, so feel free to subscribe there. But until then, we will see you in the next one, and thank you so much for watching. Take care.